I'm Zita.
I'm Jared.
Welcome to our home. Come on in. Do you remember the mini budget 3 years ago? I never seen anything like that before. I've been in this industry for so many years, and 3 years ago, mini budget was something we never seen ever. And do you remember that our mortgage rate was just kind of expiring? This was obviously the autumn,
Yes.
and then next year spring, our fixed rate was up.
Yeah.
And so we were obviously, before the mini budget, we could see that the fixed rates were going up and up and up and up.
They were increasing, yes.
And then we were calculating, okay, so this is how much our monthly payment will go up, or now this is how much. And then we did the very drastic thing, and we pulled the plug on that fixed rate and we remortgaged early. Do you remember?
Yeah, we did pay an early repayment charge. It wasn't an enormous early repayment charge, but if we had left it for it to expire, the fixed rate, we would have been on probably a rate in excess of 3% more than what we.
It was scary, wasn't it? It was
what
really
we're
scary.
on. Yeah. So yeah, I wouldn't recommend that to everyone to do that. You need to speak to a mortgage broker, get some advice.
Definitely.
And they can do the correct calculations for you if it's actually worth doing something drastic like that. But it was because the bond yields spiraled out of control because of unfunded tax cuts, from Liz Truss, the Prime Minister at the time. But it did illustrate how politics and making decisions in the Treasury can have a serious impact on mortgage rates.
Definitely. And I think, definitely people should not copy what we did in terms of breaking their fixed rates early. Always get advice if you think that's the right thing for you. We did it because of being experts. We knew the risks, and we done the right thing, but obviously that was right for us. It's not right for everybody.
Yes.
But I think that this example, what happened to us and a lot of people, I do remember, people were panicking about the rates going up, but that's the market, isn't it? So we did see the ultra low rates, we saw the very high rates, and the market will be always like that, up and down, and people have to be aware of that.
I think the mini budget and things like that was such a shock for people because we were on such artificially low rates since the global financial crisis. The 1.5%, those kind of rates. 3.5%, 4%, that's more of a normal rate. I think when you look at your mortgage, you've got to look at, you might be taking out a 30-year mortgage, okay? Some stage, you might fix your rate, for example, and it's going to be on a low rate. And then when you come off and it expires, you'll be on a higher rate. But if you look at the overall long-term average over 30 years, I think sometimes that's the best way to think about it.
Definitely. And there's another thing, like people need to be aware of this. They have to, and I think a lot of people on ultra low rates got the shock of their life when the mini budget happened. It was such an extreme. And I think a lot of people do need to be aware of this. Yes, I can experience the high and the low, but also the other thing people are not aware of, and there's a myth going around, if the base rate goes down, I always get a lot of emails and phone calls from clients just to say, can you get me a lower fixed rate now because the base rate went down. That's not the case. The fixed rates aren't following the base rate. It's a different system. So it's the swap rates, isn't it? What is impacting
the swap rates drive the fixed rate mortgage market, and a swap rate is what lenders think the rates are going to be in the future, not what they are right now. Okay, and it's basically a rate where a lender swaps a rate with another lender. Okay. And that's the kind of the swap rate market. So it's completely different to the Bank of England base rate. The Bank of England, their primary job is to control inflation. Okay? And, sometimes they will increase the Bank of England base rate, sometimes they'll decrease it. okay, and it's for different reasons. If they increase it, they're trying to control inflation, which is high. If they're trying to decrease it, they're trying to stimulate the UK economy because it's weakening. So no, it's not a direct correlation, the Bank of England base rate to fixed rate mortgages. That's driven by the swap rate market. It does have a little bit of impact, but the swap rates are more driven by, the general economy, conflicts overseas, oil prices. There's a lot of other things that come into it, and also it's the general feeling about what the economy is doing and what is the economy growing like, or is it growing? What's it going to look like in the future?
Definitely, and I think it's not like lenders don't take into account the base rates reduction, but what people don't know, often they already price it into their offerings before that base rate goes down. So there's a lot of predictions going on. Obviously, all these lenders have their chief economists. They kind of can have some predictions what the economy will do, what the base rate will do. They look at the swap rates, and often they actually reprice their fixed rates before the base rate goes down. So that's the misconception, that people think base rate goes down and fixed rates will go down. It's absolutely
the only situation where you're going to get a direct impact is if you're on a base rate tracker mortgage.
Yes, absolutely.
You get an immediate impact on a rate reduction.
Yes, and just to make it clear, of course, whoever is sitting on a fixed rate mortgage already, whatever happens to swap rates as well, that's not going to be impacted. That stays the same for a number of years. But people who are just kind of buying a property, they just applied for a mortgage or will be applying for a mortgage soon, that's when it's interesting that lenders are repricing. So when they reprice, and that means that their fixed rate offerings are reducing, or the rate is reducing, then they can have a lower rate. But if they are repricing and increasing the rates, then obviously the market will offer slightly higher fixed rate products. It's for when you are applying is when it's relevant.
That's when it's the most important, when you're actually, ready to apply for a mortgage. We can only look at mortgage rates at that particular time, and we obviously try and get the best deal we can for the client in terms of cost.
Definitely. But that leads me to my next topic, really. What about the rate chasers? What do you think of? Who are the rate chasers, really?
Well,
what would you say are the rate chasers?
Yeah, we get constant phone calls that, if we're talking to a client, they may want to speak to quite a lot of mortgage brokers, a number of mortgage brokers, to find out who's offering the best rate. But what customers need to realise is, 1 week Santander may be cheaper than Nationwide. The next week Nationwide could be cheaper than Santander.
It's not even a week, it could be a day.
Yes.
Like if you source today, you source for a client today, Halifax is the cheapest, and that rate might be pulled by tomorrow, and tomorrow Santander will offer something better. So it's actually daily changing.
Yes,
so somebody can call you today, you tell them that's your cheapest option. If they call tomorrow, that will be potentially a different. So that's what people don't really understand. So if they call people, like in a space of a week, and they speak to every day a different broker, they could have different
pricing.
Of course, different brokers can have access to different providers. That's very important, I think, for people to understand. You could deal with a broker who only have like 25 lenders in their books, but they could deal with a broker who has 80 different lenders in their books. So that can make a difference.
If you've got a more comprehensive range of panel lenders the broker uses, that's the better situation. But yes, it's quite a fluid market, the interest rate market for mortgages. It can change, on a daily basis. We obviously get notified well ahead of changes, which does help us in our role.
Definitely. I think what we discussed this several times, I think people shouldn't underestimate the advice, the recommendation, the expertise. So of course, everybody wants the best possible rate. I do get it, everybody.
Absolutely.
That's fair enough. But don't underestimate who is providing you that rate, what advice, recommendation, expertise you're getting on the background. it's not just about the rate. I think that's what people need to understand. So
Yes.
I think it's absolutely right. Do your research. We do our research when we want to use some services. Check out the Google reviews. Look on the website, make sure that you are dealing with a broker or mortgage advisor who is very respected in the industry and providing great service. Make sure they have access to a very large panel of lenders. That's really important, not just 25, but 80 or big number. And then if you have the right advisor, that advisor is going to check the rates up until completion. That's
Absolutely,
the key thing,
yeah.
isn't it?
That's one key thing we do for a client when we submit an application. A mortgage application for a client, it reserves that rate. So even if that lender increased that rate, they don't have to worry. Their rate would stay the same as what we submitted the application on. If that lender does reduce that rate, however, right up until completion, we can actually, and you're eligible for the rate reduction, we'll make sure our clients get put on that new rate. Okay, so it's a fail-safe option. We reserve the rate for them when we do the application, but if the rates do go down, we can make sure they get put on the lower rate, which is really powerful.
Absolutely. And I think one more thing is, getting the best rate on the market. It depends on a lot of things. It depends how big of your deposit.
Absolutely.
It depends on your circumstances. Some people can't go to every single lender because of their type of job, their contract, their circumstances, their affordability. So often we have to narrow that market so they can actually get the mortgage, but they might not going to get the best rate. But then with the process what we follow and some other brokers as well, once we reserve a rate, we have the opportunity to reduce that rate if the lender reduces the rate in their category. So they can close with a lower rate, but I think that's what it is. Get the advice, correct advice, and if the service is at a high standard, then you will know you will be looked after and you will get the best possible rate.
Absolutely.
Yeah.